We had that rand weakening slightly yesterday afternoon, back on the front foot today, and it looks like there are a lot of factors out there supporting the rand at these levels.
Absolutely. We definitely have got downside momentum if we do manage to break through 667. The interesting dynamic is that we've seen a lot of support come in sub this, just sub 670, which is keeping it around these pivot levels, despite the fact that the euro is galloping up to 143, despite the fact that oil's above that 120 level, traded closer to 123 today, and obviously the rally that we've seen in the gold price. Those are all posing the downside potential for the rand, but right now it's remaining around the 670 pivot.
And the market really seems to have taken that Chinese rate hike into its stead yesterday, so no big reaction from the market to China hiking rates by another 25 basis points.
No, we haven't seen any massive reaction. In fact, if anything, the dollar remains weak. We continue to see concerns coming out of North Africa and the possible contagion into the Arab states around the oil price. We are expecting to see oil trade a lot stronger, looking up potentially even as high as $130 on the barrel.
So in the meantime, all eyes really focused on the ECB, which wraps up its two-day meeting tomorrow. But we also have the Bank of Japan meeting. We have the Bank of England meeting as well. What are we expecting out of all of those, and why the suspense in the markets? Because an interest rate hike has been priced in Europe already.
Well, I think it's really the sentiment, Steve. I think that the sentiment right now is waiting for one of the big central banks to hike interest rates. The inflation environment is starting to add pressure. There certainly is a lot of pressure coming in from the emerging markets. If you look at South American emerging markets, experiencing inflationary pressures, you're seeing it coming through in the likes of their CPI numbers that have been released recently, looking for interest rate hikes out of those regions. And obviously now, with the ECB coming into the bigger picture, the BoE as well, they face other headwinds with the likes of austerity, with the likes of their financial system not being on the best footing. But nonetheless, the inflation is something that's posing a massive, massive risk, and we certainly do expect to see that 25 basis points tomorrow.
Well, the Bank of England appears to be in a bit of a bind, though, because we had negative growth in the fourth quarter of last year. The economy shrank by 0.5%. At the same time, we have inflation headed for 5%. So really a difficult decision for the Bank of England.
Absolutely, and I mean today apparently they're looking at severe pressure. I mean, they've got taxation that's coming through, they've got relative spending cuts that are going to be going through, and their relative earning is not going to be looking as rosy as it was. With the inflation headwinds, it poses significant pressure on that UK economy for the consumer, for those that do manage to hold on to their jobs. The pressures are still continuing, and I think that what we're starting to see is that these exogenous factors nonetheless are posing risks to the outlook around where interest rates are going to go in an environment where austerity is still quite severe.
I think we were chatting earlier, and you said they're calling it worse off Wednesday over in the United Kingdom. If they hiked rates on Thursday, then they'd really be a lot worse off, wouldn't they?
Absolutely, and I think that that's the big concern. I mean, if you think about the social implications of another interest rate hike on the back of what's happening in their taxation environment, on the back of what's happening around austerity, it certainly does put a lot of pressure on the consumer.
Well, bringing that back to South Africa and the Reserve Bank's options going forward, it's not quite as dire as it looks in the UK or Europe at this stage, but we are facing rising inflationary pressures in South Africa as well.
Well, that's the thing, and I think that the concern at the moment is that the exogenous factors that are posing the massive inflationary pressures, are they able to be curbed by a monetary policy rate hike? Not necessarily so, but nonetheless, the inflationary expectations need to be managed. In this environment that we currently face ourselves, we as South Africans certainly remain within that target band, which is beneficial to us at the moment, but we certainly don't want to get to a stage where we start to get to the upper end of that inflation band and have to aggressively hike interest rates. So potentially what the outlook should be is something around a little bit more prudent approach, a conservative approach, potentially seeing an interest rate hike or two before the end of the year, just as we manage expectations going forward.
Well, you mentioned the potential of oil going up by another $10 a barrel to $130 in the short term, even with the rand around R6.70. That's going to have a big inflationary impact.
Well, definitely. I mean, we're not seeing the offset that we're seeing with regards to the rally in the oil price and the strength on the rand. The rand has found itself a bit of a base around the 670 level, and should the oil price rally up towards closer to 130, it will pose continued inflationary pressures, and we're already seeing those coming through in our petrol price hikes and the potential for more to come.
Brigid, the FOMC minutes, that was from the March meeting, came out last night. Were you detecting any more hawkishness among those Fed officials? Because they seem to be a little bit divided now on whether QE2 should run its course, whether we need more monetary stimulus in the US system, and when interest rates should be hiked in that economy.
Well, I think that there's a bit of a catch-22. I mean, the QE2 is going to wind down sort of towards the June kind of handle, which is the middle of the year. A lot of speculation as to whether or not we'll see another round of QE. The potential for the fallout in terms of what we saw subsequently in the likes of Ireland, in the likes of Greece, and obviously Portugal, around talks of pulling out QE and what the implications are within those weaker economies, often results in a bailout situation. So there's a lot of debate around whether or not we will in fact see that. That's seen the dollar continue to weaken. We've seen a rally in the US Treasuries, and unfortunately I think the outlook for the United States is going to be around some form of massive budget cuts. There was talk about the Federal Reserve looking at and certainly Parliament looking at ways of cutting budgets to the tune of up to $6 trillion in the next 10 years as they look to manage their exposure.